hiker to hold means come the May 3 meeting, which is clearly more than a month away. Right now, overall, market participants are thinking hold or hike. These are practically neck and neck. This is 45%, this is 54%. Right? These are practically neck and neck. So it's a coin flip right now. This is really just a coin flip, whether we hike or whether we hold. Now, the main idea here is to think about what could change our mind. And the first thing that's going to possibly change our mind, we have day 2 of bar testimony. This is the testimony regarding SVB and Signature. And then we have on Thursday, GDP before the bell, 8:30 a.m. And then we have the core PCE, right, as well coming up on Friday, core PCE price index. And that's the month over month. Between those two hot zones, and then you get some Chicago PMI, Michigan consumer sentiment, but PCE and GDP, if we're going to see any kind of shift here, that would absolutely be it. Then that would then open the door to when do we hold, right? When do we hold and when do we cut? If the Federal Reserve can, they will do their best to get one more hike in. Why? They know they're going to have to cut. They know it, right? They know they're going to have to cut. So if you know that at some point, cutting is one of the main tools you have as a Federal Reserve member, as the FOMC, the more you have to be able to cut, the better. So to be able to get to the higher target rate probability, which seems to be 475 to 5, right? There's some expectation we could get up to 5 to 5.25, but you can see it's very minimal. But if we can get that extra hike in, that gives them more to cut. That's really their primary tool, primary weapon, if you will. Okay, so then let's shift gears and then ask ourselves, what are the implications and how do we measure what happens next? So I'm going to jump on over to the TradingView charts for this. And what we can do with TradingView, and I love using the TradingView charts because on the TradingView charts, we've got our DPMRs running on both the 60-minute time frame and the 1-hour time frame. And we can actually run our HPMRs on this thing too, but I'm using the DPMR masterclass layout, which means on the 1-hour chart, I've got the daily volatility measuring stick on the screen, and on the daily time, I also have the daily volatility measuring stick. So the two places I'm looking for clarity: bonds. If yields are going to move lower, bonds have to move higher. And that's what I want to see. I want to see bonds move higher because that's lower yields. Bonds love to front run Federal Reserve decision, monetary policy. The other thing I want to see is the euro continue to move higher. And it is. So we want to see the euro continue higher. Why is that? Because a strong euro is actually a weak US dollar. Why does a weak US dollar matter? Because a weak US dollar is indicative of what? It's a more dovish monetary policy expectation. What's dovish? Dovish means favoring lower rates, right? Remember, the market's always looking ahead. Markets are always sort of front running what they think is going to happen. So the last place I want to look at, if we're really starting to get out of the woods, the last place I'm going to look isn't the S&P or the NASDAQ. It's the Dow futures and the XLF. The Dow futures getting back above, and it's a pretty specific level that I'm looking for. Take a look at our Darvis resistance. This is how we put everything together. Take a look at the Darvis resistance right there. Okay. That price level is 33,000. That's a major psychological level. Getting back above 33,000 is very likely, obviously, going to break this Darvis, which is perfect. But it's also very likely, it's necessary even, that two markets move higher. One is going to be the XLF. XLF is the number one weighted sector in the Dow. So the Dow is going to have the most relationship to that weighting of XLF. Is going to move the Dow the most. The second most important is going to be XLK. And XLK will continue to benefit the NASDAQ. It's going to continue to benefit the S&P. But with those two start moving higher, leading the way with XLF, this is how we can start to measure that there is a sigh of relief. We can start looking bullishly at some of the stronger corners of the market. But again, taking a look at from a macro perspective, what are we measuring? Fed fund futures and the reaction they will have to the GDP and the PCE Thursday and Friday. All right. Okay, so what I will do in the premium video that I will send out to members is we'll get into relative performance and rotation as well. We'll dive into that topic, as well as if and when we do move higher, which corners of the market are we most interested in? And if we do move lower, which corners of the market we are most interested in. And a lot of that's going to fall in line with what many of you already have. And that's the This Week in the Market update that I put out last Friday. And we'll get into a lot of what we're looking at regarding, are we really at the tail end of this crisis or not? Do we need to remain bearish in certain corners of the market like regional banks and healthcare and maybe even big banks? Or is tech still going to do all the heavy lifting here? That's what we're looking at as we're winding down end of quarter. And why is end of quarter so important? It's the report card for folks who have to really deploy a lot of cash as this quarter ends. In other words, their clients, right? If you're managing money, their clients, those clients are going to say, well, what do you have me in? How am I positioned for next quarter? And how are you dealing with this bank crisis? And believe me, clients know which corners of the market are strong. And they absolutely want to see exposure to those corners of the market. They know which corners are weak, and they probably don't want to have a lot of exposure to those corners of the market. So what's going to benefit? Likely tech, semiconductor, maybe communications. What's going to struggle? Could be financials, could be regional banks, could be healthcare, right? And that's why we want to sort of parse this market out. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.